Good evening, ma'am.
Good evening, Amrita. Amrita, Harish, Joshni, Varsha. Good evening, dear.
Good evening.
Yeah. Take Goodwill chapter.
Taken, ma'am.
Yeah, fine. Just a moment. Page number. We finished this question. Page number 9. Average profit method. This question, A and B are partners sharing profit equally. We have finished this question, or we want to do this now? No, we didn't finish this question. So take page number 9. Okay. Average profit method. A and B are partners sharing profits equally. There are two partners in a partnership firm, A and B, and they share profit of the business equally. They agree to admit C for equal partners. So what happened? These two partners, A and B, they decided to admit a new partner C. They are going to admit new partner C into the partnership business. For equal partners means, again, A and B are old partners, C is the new partner. So all the three partners will get the profit equally. For this purpose, goodwill is to be valued at 150% of average annual profit of the last 5 years. So, as I told you, what are the circumstances when goodwill is calculated? So, this is also one of the situation when any new partner is admitted into the partnership business, goodwill is calculated. Here C is the new partner who is going to enter the partnership firm. That is why goodwill is calculated. Profits of the 5 years are given. 31st March 2015 profit is 40,000. Then 31st March 2016 60,000. 31st March 2017 1 lakh. 31st March 2018 20,000 loss. Always whenever any figure, any amount is written inside the bracket, it shows that it is a negative figure. That means it is loss. 20,000 is written inside the bracket, so it is loss. 31st March 2019 1,50,000 profit. What are the additional information given? During the year ended 31st March 2016, an asset of the original cost of rupees 2 lakh with book value of rupees 1,50,000 was sold for rupees 1,24,000. What is the meaning of this entire sentence? There is an asset. What was the original price? Original cost means purchasing price of the asset, 2 lakh rupees. Book value 1,50,000 means after charging depreciation every year, whenever any asset is purchased, every year business charges depreciation. So after charging depreciation, now the value of the asset has become 1,50,000. So 50,000 is the amount of depreciation charged from the date of purchase till now. Was sold for rupees 1,24,000. Now what happened? That asset was sold by the business for how much? 1,24,000. So 1,50,000 is the value of the asset which was sold for 1,24,000. So what was the loss suffered by the business while selling the asset? Can you tell me the loss? 26,000 is the loss. How we got 26,000 loss? 1,50,000 is the value of the asset that is going to be sold in the market. But the business got, after selling that asset, only 1,24,000. So The business suffered loss after selling the asset 26,000. This is abnormal loss. If any asset is sold by the business and the asset is sold for loss, then that loss is known as abnormal loss, because that loss doesn't happen by selling product of the business. If any loss occurs due to selling the product of the business, it is normal loss. We will deduct from profit. But if any loss happens after selling the asset of the business, that is abnormal loss. Here this loss happens because we have sold the asset of the business. So this is abnormal loss. And what is the rule? How we treat abnormal loss? We always, what we do? Add back the abnormal loss in the profit in order to get the correct profit when we calculate goodwill by using average profit method. This is the rule we have to follow. So first we have to make the adjustment table. Whenever question says to calculate goodwill using average profit method, always make adjustment table in this way. Particulars, then profit is given for 5 years. So write the years 2015, 2016, 2017, 2018, 2019. Profit or loss. Some year there may be loss. So in particular column you have to write profit slash loss. 2015 there was profit 40,000, 16 60,000, 17 1 lakh, and 2018 there was loss of 20,000. So we wrote in bracket. 2019 again profit 1,50,000. Now you have to focus on the date. When the asset was sold? Asset was sold on 31st March 2016. So this year falls directly, we can see 31st March 2016, that is 60,000 the firm earned the profit. So in that particular year you have to add the abnormal loss. What is the abnormal loss? Loss suffered by the business by selling asset. 26,000 is the loss. You have to add back that abnormal loss. In which year? 2016. Any doubts so far you are having? Please let me know if you are not able to understand. Any doubt?
No, ma'am.
Why we are adding 26,000? It is clear to you? Yes? Please reply me, dear
Ma'am,
students.
because it is an abnormal loss.
Yes. Why others are not replying me? It is clear to you all?
Yes.
Okay, fine. Now we will see the next adjustment. On 1st April 2017, two computers costing 1 lakh were purchased. Again, whenever we are talking about computers, it is asset. It is not normal product. Okay, it is asset for any business. So, two computers costing 1 lakh were purchased means asset are purchased for 1 lakh rupees. When? 1st April 2017. Whenever in the question they say that some assets are purchased, immediately it should come to your mind. If any asset is purchased, we should charge depreciation. In class 11th, you all must have learnt the depreciation chapter. So, whenever any asset is purchased by the business, what the business does? From the date of purchase of an asset till the date asset is being sold, business charges depreciation on regular basis. So, in the same way here also we have to charge depreciation, and were wrongly
Excuse me, ma'am.
Yes? Yes?
Ma'am, could you say the question number, ma'am? I joined right now also.
Okay, Roshni. Page number 9, dear. Page number 9, question number 1.
Okay, ma'am.
Yeah.
Okay, ma'am.
Yeah.
Thank you, ma'am.
Fine, dear. And were wrongly debited to travelling expenses. Very important concept. What do you mean by capital expenditure and what do you mean by revenue expenditure? Please listen carefully. Very important concept. In 11th also you must have read, but I don't know how many of you is clear with this concept. So capital expenditure are those expenditure which are spent by the business at the time of purchasing an asset. For example, if any business purchases machinery, machinery is an asset for the business. In order to make the machinery run, okay, the installation charges will be paid by the business. So that installation charges will be treated as capital expenditure. What is the meaning of capital expenditure? It will add the value of the machine. For example, suppose I am purchasing a machine from abroad, from any country. I am purchasing a machinery. So I have to pay the cost of the machinery as well as the what? Importing charges also. From the other country, when it will reach me, I have to pay many more expenses. So those expenses will be added in the cost of the machinery. In the same way, business also does. Whenever business purchase any asset, if any amount is spent on the asset in order to make it work, then that expenses are always added in the cost of the machinery. That is capital expenditure. Now what about revenue expenditure? Revenue expenditure is the normal expenditure, routine expenditure. Harish, please mute yourself, dear. Harish, please mute yourself, dear. Yes, Harish, can you hear me?
Yes, ma'am.
Please mute yourself, dear. Okay. Now, what do you mean by revenue expenditure? Revenue expenditure means the routine expenditure of the business. What is routine expenditure? For example, suppose we have purchased an asset. After 1 year, the asset may get repaired. So, we have to spend a small amount for its repairs. That is known as revenue expenditure. Okay. But remember one thing, at the time of purchasing an asset, whatever extra amount is spent on asset in order to make it work, that is known as capital expenditure. Means it will add to the cost of the asset. But after 1 year or after 6 months, after 7 months, when we start using the asset, and once we start using, yes, Harish, tell me.
Ma'am, can you please repeat the capital expenditure alone?
Yeah, fine. Okay. So capital expenditure are those expenditure which are spent by the business at the time of purchasing an asset. Suppose I am business, I am purchasing a machinery. Machinery costing 1 lakh rupees. Now, only purchasing machinery and keeping in my godown will not make it work. I have to install it in order to make the machinery work. So, I have to pay some installation charges. That installation charges will be added to the cost of the machinery. For example, installation.
So this installation is known as capital expenditure.
Yes. We will not show this as revenue expenditure. We are not going to show this installation charges in the PL account. Okay. Suppose the machinery cost 1 lakh and I am paying installation charges 10,000. So I will show the cost of the machinery as 1 lakh 10,000. That is why the 10,000 is known as capital expenditure. Okay.
Oh. Yes, ma'am.
It is clear what is the meaning of capital expenditure to all of you?
Yes, ma'am. Yes, ma'am.
Okay, fine. Now, what about revenue? As I told you, after the machine starts working, it may be after 2 months, 3 months, the machinery may get repaired. So, we have to pay some small amount, for example, 1000 rupees, 800 rupees. So, these we will charge to PL account because this is revenue expenditure. And salary, paying salary every month to our employees is also revenue expenditure. But when we purchase some asset, we don't purchase every month or every year. For example, after every 5 years we may purchase, or once upon a time we may purchase the machinery assets. Okay. So we don't purchase asset regularly on regular basis. So it is capital expenditure. But revenue expenditure are incurred frequently after every month or after 2-3 months or after 6 months, but frequently, repeatedly these expenses happens in the business. Now you are clear with what is revenue expenditure and what is capital expenditure. The concepts are clear to all of you.
Ma'am, depreciation is also revenue expenditure.
Yes, it is revenue expenditure because once you purchase any asset, the moment you purchase, from the date of purchase we start charging depreciation. It's revenue only, because every year we charge depreciation, and from the date of purchase till the date of asset is being sold, we charge depreciation. It's a revenue expenditure only, charging depreciation on asset. Any doubt? Anybody? Any doubt you have? Okay, fine.
Ma'am,
Yes, Harish, tell me.
ma'am, the same topic we have in this economics also.
Oh,
Government budget.
okay, the same topic you are having. Okay, so now I
Revenue
thought.
expenditure and capital expenditure.
Okay, now I have taught you economics also, right, Harish?
Yes, sir.
Okay, dear. Okay, fine. So now depreciation on computer was to be charged 20% per annum on written down value method. Again, go back to 11th. In 11th, you have studied that we charge depreciation by using two methods. What are the two methods? Straight line method and written down value method. What is straight line method? We always charge depreciation on the original cost of the asset. Suppose I have purchased asset for 1 lakh rupees and rate of depreciation is 10%. So every year 10% of 1 lakh, 10,000 I will charge depreciation on the asset purchased by me. And what about written down value method? Suppose I have purchased the asset for 1 lakh and rate of depreciation is 10%. So if we use written down value method, for the first year depreciation will be 10,000. Then for the second year, this you have to deduct this depreciation amount from the cost. That is 1 lakh minus 10,000. Whatever amount comes, you have to charge on that. Again, so every year we will charge depreciation on written down value. That is, we used to prepare the ledger account. I hope you all remember that balance BD, we have to charge depreciation every year from the second year on balance BD. We write now to balance BD. On that particular amount we charge depreciation if we follow written down value method. So here basically what we want, the question says asset has been purchased by the business. If any asset is purchased, we have to show in the balance sheet where asset will come. All assets, liability, capital we show in the balance sheet. But they have wrongly debited to traveling expenses. What is the meaning of this? The accountant who prepared the accounts, he thought purchase of asset. What was the cost of that two computers? 1 lakh rupees. That 1 lakh rupees he treated as traveling expenses, means he would have debited to PL account. In the debit side of PL account has revenue expenditure. He treated it as revenue expenditure. So he would have written two traveling expenses in the debit side of PL account and 1 lakh rupees. But actually it is a mistake. Purchasing asset is not a revenue expenditure. It is a capital expenditure and it should be shown in the balance sheet asset side. At the same time, depreciation should also be charged. So think for a moment. Suppose you are purchasing asset and you don't know whether it is a capital expenditure or revenue expenditure, and you think that purchasing an asset is a revenue expenditure. So definitely you will show in the debit side of PL account. Then you are not going to charge any depreciation because you are thinking that it is a revenue expenditure, and no one charges depreciation for revenue expenditure. Only for capital expenditure we charge depreciation. This was the mistake done. Now you have to rectify this mistake. How you are going to rectify this mistake? Again, first you have to see the date when it was purchased. 1st April 2017. So 1st April 2017 means when the financial year will end. If the financial year starts 1st April 2017, the financial year ends at 31st March 2018, right? Am I right? So, are you understanding?
Yes, ma'am.
Okay.
Yes.
Okay, fine. So, you have to see 31st March 2018. Already there was loss, 20,000 loss shown by the business. So, in that particular year, what you are going to do? This 1 lakh by mistake in the PL account debit side accountant has shown. That is the meaning of second adjustment. So, now you have to add back. Why you are adding back this 1 lakh rupees 2018? Because this 1 lakh, if you are treating as revenue expenditure and you are debiting in the PL account, just imagine it will reduce the profit, right? It is going to reduce the profit of the business. 1 lakh, by 1 lakh rupees, the business profit will be reduced. Actually, it is not a expenditure, it is capital expenditure asset. You have to show in the balance sheet. But you have treated as expenses and shown in the debit side of PL account. So, it reduced the profit up to 1 lakh rupees, which is a very big mistake. So, you have to add back this in order to correct the mistake. That is why in the year 2018, we are adding back this 1 lakh rupees. What you will write? Add capital expenditure charged to revenue expenditure. 1 lakh rupees you have to add. Now, if now you have rectified the mistake, okay? Now what you have to do? You have to charge depreciation on this asset, okay? Once the asset is purchased, you need to charge the depreciation. Now what is the rate of depreciation given in the question? 20% per annum. Per annum means for 1 year 20% depreciation needs to be charged. And what is the method they are using for charging depreciation? Written down value method. So how you have to show it as working notes, calculation of depreciation. First you should know what is the date of purchase. 1st April 2017. So when you will charge depreciation? After end of complete 1 year, that is 31st March 2018. First year will complete after the date of purchase of asset. So for 1 year you will charge depreciation on 1 lakh rupees, 20%. It will come 20,000. This 20,000 depreciation will reduce the profit. Why it is reducing the profit? Because always depreciation we will show in the debit side of PL account. Any expenses, any losses will reduce the profit. So 2018 31st March, again you have to show 20,000 less, right? Less depreciation 20,000. Again for the next year 2019 also the profit is given. So again this asset will be with the business for next year also. So next year also you have to charge depreciation end of the year, that is 31st March. If you are charging depreciation means it will reduce the profit. So again, on what amount you will charge depreciation? Because the question says you have to charge depreciation 20% on which method? Written down value method. And as I told you, written down value method means first year you will charge the depreciation on original cost. What is the original cost? That is the purchase price, 1 lakh rupees. So on 1 lakh, 20% for the first year we charge dep. It came to 20,000. Second year, on which amount you are going to charge the depreciation? 1 lakh minus 20,000 depreciation already charged. You have to reduce the depreciation. So now value of the asset is 80,000. Now on this 80,000 only you have to charge 20% dep. Written down means first year minus depreciation, whatever amount comes in the second year, on that amount you will charge depreciation. So 80,000 into 20%, 16,000. In this question 2020 profit is not given. For example, if 2020 again the third year profit is given, what you will do? You have to charge again depreciation. How you will charge? Now Out of this 80,000, this 16,000 depreciation you have to reduce, and whatever amount comes on that 20% you will charge debt. So written down value goes in this way only. First year cost price, second year deduct the depreciation, then whatever amount comes charge debt. Then if you want to charge debt for the third year, again if the question says you, then again you have to deduct the depreciation of second year, and whatever amount comes you have to charge debt for that amount. Any doubt, anybody? Please don't hesitate, okay? Don't think what madam will think. I won't think anything. If you don't understand any single thing, please do ask me. Yes? Harish? Amrita, Joshni, Varsha, Roshni, Kirtika, please ask me, dear. If you don't understand, do not hesitate. No one will think
Could
nothing.
you again explain the depreciation part?
Depreciation part. Okay, fine. Okay, that written down value is not clear.
No, ma'am. This next year one.
Okay, next year. That is what, that depreciation part you are asking, na? Yeah.
Yes, ma'am.
Okay, fine. So for the first year, you are going to charge debt on 1 lakh rupees. 20% of 1 lakh. For the first year, 20,000. First year, so 2018 31st March, less debt 20,000 we have to reduce. Because 2017 1st April only we have purchased that asset. So for one complete year, we have used that asset, and at the end of the year, we are going to charge debt. Now for the second year, second means 2019, again the asset will be with the business because no information is given that the asset is sold. So we will assume that still the asset is with the business. And as I told you, till the date of selling the asset, we have to charge depreciation. So for the next year, that is 2019 31st March, again you have to charge debt on that 1 lakh rupees, 2 computers business is having. So on what amount you will charge? They are asking you to charge debt by written down value method. And what is written down value method? First year 20,000 debt, original cost was 1 lakh. Reduce that 20,000 debt. Now the cost of the machinery for the second year, that is 2019, will be 80,000. So on this 80,000 you have to charge debt 20%. So depreciation will come for 2019 16,000. Again this 16,000 you have to deduct from 2019 profit. Now it is clear, Amrita?
Yes, ma'am.
Any doubt anyone has? Please tell me. Varsha, Joshni, Harish, Kirtika, clear to
No,
you?
ma'am.
Fine. Fine, dear. Fine.
No, ma'am.
Okay. So now what we are going to do? Now we have to see the correct profit we have to calculate, because all the adjustment done. Now you have to check the correct profit each and every year. So we will check. 2015, there was no adjustment in 2015. So you can write the profit as it is 40,000. What about 2016? There was some abnormal loss on selling of the asset, which we have added back. So 60,000 plus 26,000. Total profit for 2016 is 86,000. What about 2017? No adjustment given regarding this year. Same profit you will write, 1 lakh rupees. What about 2018? What has happened? Again, in the beginning there was loss of 20,000 given in the question. Then that 1 lakh rupees by mistake we treated is as revenue expenditure. So we added back because it is a capital expenditure. So we cannot deduct it from profit. We added back. So 1 lakh should be added back. Then what happens? Again depreciation, the same year we have to charge for that 2 computers purchased, 1 lakh rupees. So 20,000 is the debt. So from 1 lakh, this is the positive figure, that is the profit. 1 lakh is the profit. So from this we have to deduct 40,000, 20 plus 20, these two negative figures. So it will come to 60,000. So 2018, how we got 60,000, I hope clear to you all. 20 plus 20, these are negative figures. Negative means you have to reduce from profit. What is a positive figure? 1 lakh is the positive figure. Out of this, you have to reduce these two negative figures. 20 plus 20, 40,000. So you will get positive figure, that is 60,000 is the profit of 2018. What about 2019? 1,50,000 is the profit in the beginning, and we have to reduce the depreciation 16,000. Then the actual profit will be 1,34,000. So for any doubt, please ask me. Any doubt you are having?
No, ma'am.
Okay. Joshni, it is clear to you, dear, or you have any doubt to ask?
No, ma'am.
It is clear?
Yes, ma'am.
Okay, fine. So now what we are going to do? Now we are going to calculate the goodwill. What is the formula for calculating goodwill by using average profit method? The formula is average profit into, already they have given in the question, 150% of the average annual profit to be valued. So 150% you can write like 1.5.
Ma'am, 1.5.
Yes, no,
Okay.
no, yes, dear, like 150% given in the question. Read the question first. Goodwill is to be valued at 150 percentage. Percentage means how you will convert into percentage. 150 divided by 100, na? So you can cut 110. So you can write 1.5 or you can write 150 divided by 100. Both means the same. No issues, okay? So first you have to calculate average profit. Now you got all the correct profit. You have to add all those things. 40,000 plus 86,000 plus 1 lakh plus 60,000 plus 1,34,000 divided by how many years profit given in the question? 1, 2, 3, 4, 5 years. Divide by 5. If you do in this way, you will get the average profit 84,000. 4,20,000 divided by 5. Now simply put the formula. What is the formula? Goodwill equal to average profit into 150 by 100 also you can write. The same answer you will get. So 84,000 into 1.5 if you do, you will get 1,26,000. This is the value of goodwill. Please now tell me any doubt, anything you are not able to understand, don't hesitate, ask me. Anything you can ask, don't hesitate. If 11th concept is not clear, please do ask me. If depreciation is not clear to you, don't hesitate. Yes? I want reply from all, please. All the 6, reply me. You have any doubt?
I'm not able to understand. No, ma'am.
Who is not able to
No, ma'am.
understand? Yes, who is not able to understand, dear?
Harish.
Okay, Harish, what you are not able to understand? Tell me.
Depreciation, ma'am.
This depreciation.
Ma'am, depreciation is what you charge,
Ask me, dear.
Ma'am, depreciation is like you charge on machineries like that, ma'am. So
Yes, dear. On asset, you know now.
on sale, you compensate on those
No.
loss like that, something.
No. Listen. First adjustment was different. Second adjustment is different. This depreciation is charged on second adjustment. What was the second adjustment? In the second adjustment, it was given that 2 computers for 1 lakh rupees has been purchased by the business. Whenever computers are purchased, it is asset for the business. They are not talking about selling the asset. I am talking about the second adjustment, not about the first adjustment, okay? That 1 lakh rupees is the purchase price of the asset. Now what has happened? If any asset is purchased, where you will show? You have to show in the balance sheet, right? Assets are always shown in the balance sheet asset side. But what they
Yes,
did?
ma'am.
They debited to traveling expenses means purchasing an asset is wrongly shown as traveling expenses. Means they have shown in the debit side of PL account. They are treating it as revenue expenditure. It is a capital expenditure, right? Purchasing asset is a capital expenditure. but they are treating it as revenue expenditure and showing it in the debit side of the PL account. This is a mistake done by the accountant. Now you have to first rectify it. Rectify means you have to correct the mistake. Now how you will correct? By mistake, suppose any amount by mistake you have shown in the debit side of the PL account, you have to remove from PL account na. Because if any expense by mistake you are showing, it means it will reduce the profit, right? In PL account, any expense, any losses shown, what does it mean? We have to reduce, means we are deducting those expenses, losses out of the profit only. Now, whichever business is earning the profit, out of that profit, we are reducing these expenses and losses. So, if this expense is shown in the debit side of the PL account, it reduces the profit, right? This 1 lakh. But we should not show in the PL account. Why we should show? It is asset, means it will go in the balance sheet, na? In order to rectify, what you will do? You will remove. When you remove this 1 lakh and show in the balance sheet, this 1 lakh will increase the profit, na? If you are showing this 1 lakh in the debit side of PL account, it is reducing the profit. Once you are removing this 1 lakh means again the profit by 1 lakh will increase. Harish, now it is clear to you?
Yes, ma'am.
So we are adding back this 1 lakh in 2018. Now the mistake has been rectified. Now the second step. Now you are treating it as capital expenditure because you rectified the mistake. Now what is the other step? Now you have to charge depreciation. The question says the depreciation should be charged 20% and the method of charging depreciation is given. Written down value method. You should use this method. So when the asset was purchased, when these two computers are purchased, Harish, can you tell me? Please unmute yourself and tell me. See the question. What was the date given? Purchasing date of this asset, computer, 1 lakh rupees. Tell me.
Purchasing date, ma'am. 2000.
Yes.
First Jan.
Not 1st Jan, dear. Second adjustment. 1st April 2017. Two computers costing 1 lakh.
Oh, sorry, ma'am.
It's okay. No, it's okay. No problem. So from 1st April 2017 till 31st March, the year, when the year will end, if year starts on
31st March
2018.
April 1st to 31st March.
Yes, 2018, right? So for one complete year, if you charge DEP, how much it will come? 20,000. 20% of 1 lakh. How much DEP will come? 20,000.
20,000.
Yes. And now this depreciation, where you will show, normally forget this question. If you are charging depreciation on any asset, normally in accounts, where this depreciation you will show? Tell me. Trading.
The expense, ma'am. So debit side.
Debit side of which account? PL account.
Or
PL account.
P&L account, yes.
Profit and loss account only you show na in the debit side to depreciation. So in the same way, what we are doing, this profit like 2018 31st March, once you charge depreciation 20,000, this will reduce the profit na. That is why we are deducting depreciation. Yes, okay, from this profit. 1 lakh rupees the profit. From this we are reducing 20,000. In the same way, again 2019, the next year, asset is with us only, with business only. Again, every year you have to charge depreciation till the asset is sold. So 2019 also you have to charge the DEP. But the method is written down. So depreciation will be charged on which amount? For the first year 1 lakh, for the second year 80,000. How? You have to reduce the depreciation amount charged in the first year, right? 20,000 you have to reduce. That is the rule WT na. In this way only we have to charge DEP.